statistics as well. Really, really fascinating discussions there. And in keeping in line with that, we're going straight into our next inspiring fireside. I'm going to be inviting back on stage our moderator for this. You may recognize him from yesterday, and you also may recognize him from CNN. It is, of course, Larry Madowo, who's the international correspondent. And I've just been learning that Larry and I also share the BBC in our career history. So it's wonderful to have Larry join us again. He's going to be comparing our wonderful next fireside with co-founder and partner of Tribe Capital, who's here from San Francisco, Arjun Sethi. So please do give them a warm welcome as they come on stage to look at View from the Top, Observations from a Leading Investor. And very finally, I've been told that they'll be happy to take some questions from you as well. So please have your questions ready, and towards the end of the session, we will invite you to be part of this. Thank you so much. Please do invite Larry and Arjun on stage with a warm welcome.
Good morning. Okay, it's working. Arjun, how are you doing?
I'm well. How about you?
Good, thank you. Welcome back to Dubai. You're based in San Francisco, but you spend actually a lot of time in this region. Why is that?
We have a set of limited partners and companies that we've invested in the region, as well as on the way to Southeast Asia, so India and Indonesia primarily.
Is that a recent development, or have you always had an interest in this region, in the Middle East and Southeast Asia?
No, we've been investing in the region for 10 years, roughly, so it's been a part of our natural cycle.
All right, let's start from the top. At Tribe Capital, and specifically for you as an investor, when you look at the right DNA, what are the qualities you look for in a founder and in the startups that you back?
It's a little bit of a larger question, but so we come from a quantitative background, and a lot of what we look at is essentially what has a company achieved before we take a look at sort of the art and the science. Before we take a look at the art of the team itself. So a lot of people focus on the founder needs to be, he or she needs to have X, Y, and Z resilient attributes. A lot of what we take a look at is we think founders can come from anywhere, and they've built something of stature with the amount of time that they've had. So if you generally look at anyone who's technical, they've spent a lot of time building, and what we're really looking at is what are the attributes of what they built, how they built it, where it is today, and where do we think it's going to go tomorrow. So we really look at what have you done versus who you are or where you're from. And so when people think about what are those attributes that we look at, there's a certain amount of technical aptitude, there's a certain amount of business aptitude, I'd say logic aptitude, and then there's a sense of how we're going to think about growing whatever product you have at a high velocity.
You said before that the way some VCs analyze investments is crazy for you, and you use data, not feelings. Explain what that means. You said you come from a quantitative background.
So if you look at most companies in the way they're built today, they are software. So if you are building anything with software, we have this model that's akin to accounting, which is software has an exhaust of data. You can take a look at that data. You can build frameworks off of it. And that framework should help you, similar to GAAP accounting and financials, to be able to compare one company against multiple. So what that allows you to do is understand which companies are healthy and growing at a healthy momentum. We call it product market fit. How do you quantify that rather than, again, the feeling of someone's pitch? And that's a very good indicator of the success ratio of what the company is going to look like in the future. So if you take a step back, Jeff Bezos made a famous analogy in the past saying that they like to make investments into products or services that are going to be around for the next 10 years. In order to do that, you have to work with imperfect information. But that imperfect information, a lot of it exists within the company itself, the product that's been being built, and the software and the engagement that's already there. So when you take a look at companies like Facebook or Instagram or WhatsApp, you're looking at how far the reach and engagement was, how far how people use it on a daily basis. And if you think about the most extreme example is that we all use software, no matter what that product is, even in financial services. And those are ways in which you can really value and underwrite consumer engagement. Because you are a consumer of any product that you use. I'm sure for work you use Zoom or other products.
Right.
Those are the types of engagement metrics you can look at no matter what you're building.
You haven't mentioned this, but you took a huge amount of publicly available data to build a model for the kind of people you accept, the founders and startups, based on all this data to build, I think, a proprietary model, right?
We have our own internal proprietary model, that's correct.
Right. Can you talk a little bit about that? What can you say publicly?
So as I mentioned, it's on our website actually, where we say here's our models of how do we quantify product market fit. Most of our trade secrets are around how do we benchmark one company against 1,000, no matter where they are in the world.
So what has worked before, it's likely to work again?
Pardon?
What has worked before is likely to work again, or in a different way?
No, it's a little bit different in that if you take if you're a founder here in Abu Dhabi and Dubai, or in Saudi, or in Southeast Asia and any of these emerging markets, what you're looking to build is typically, let's call it financial services products, e-commerce products. It could be even software products for state-owned enterprises. If you take a look at what consumer engagement means to sell to your customer, it's no different than any product in the States. And so a lot of the models that you're looking at is just how does behavior look like to a business when you're selling it? What does consumer engagement behavior look like to the end consumer, which might be working at the business? And so you're only looking at 2 or 3 order effects. And that helps you just understand what is health. So if you're a founder, what do you care about? A, is my product working?
Yeah.
B, how do I make it grow? And in order to understand that at the best efficacy, you want to be able to measure that.
Okay, so on this stage yesterday, we talked a little bit about the funding winter and the huge drop in VC funding, just generally fundraising going for a lot of startups in some of these regions, India most notably. Do you see this as a correction for a time when VCs wrote too many checks, or is there something at play here? What's your read?
I think the way to think about funding is, like you take a step back as a venture capitalist. What's our job? We're looking to invest in companies that can grow at a high velocity. We're minority investors. We are advisors around the table, and we're trying to be conciliaries to the founder and the management team. And when you think about what it is that like the amount of capital that you need is essentially we're subsidizing it for those milestones. And so in the US, you have a high liquidity ecosystem where you have multiple rounds of folks coming in across series, let's call it A through D, or 50 million in enterprise value to $1 billion. And when you take a look at emerging markets, it's usually what you're trying to fit for that deficit is 20 million in post-money valuation to maybe about $500 million, because the liquidity ecosystem is not the same, it's not equal. And so, pre-COVID, you had roughly about $1 trillion come into the ecosystem for the 5 years prior.
Right.
And then you had another $1 trillion come into the ecosystem 5 years post 2018 during the COVID timeframe. And you had a large amount of capital being steroid injected into the ecosystem. So what you're seeing is there's a correction, but at the same time, the slope overall of capital being injected into emerging markets is still on the rise if you take a look at where we were in 2018. That's really great. The problem is all the companies that were funded over the last 7 to 10 years,
right,
they need an extra $5 trillion of capital in order for them to succeed. So you're going to see a lot of consolidation, you're going to see a lot of shutdowns. And so when people say funding winter, it's really that where is that capital being reallocated? And that capital is just being reallocated to alternative sources of yield, or they're being reallocated towards earlier stage investments.
But in the middle of that, do you think still anybody in financial services and fintech will survive?
It's not that they would survive, it's just that enable for any economy to be enabled. So let's take a look at Africa, for example, like Nigeria and Kenya, as we spoke about before. In order for those countries to succeed, you need small to medium businesses to be able to thrive. You need to have them to be able to have access to capital and participate in commerce. And so you need all the tools, services, and systems to be able to promote that. Some of it is going to be venture, some of it's going to be public/private. And those are the types of businesses that, in my opinion, are going to be most likely to survive and probably have better unit economics.
you're a San Francisco fund, but you have quite an exposure for the rest of the world, Southeast Asia. Here you say you have LPs in the region. You talked about Kenya and Nigeria. What are the regions or the countries that you're also kind of paying a lot of attention to, and why?
Yeah, so when we started the firm, our whole goal was that we could quantify product market fit wherever they were in the world. So we would build, we would buy in some cases, or we would take over something like private equity. So today I run Tribe Capital, but we also spun out our quantitative framework. We created a firm called Termina, and then there's another company called Capital, which I help run, and that's our bank. So there's 3 different verticals that we started building and starting and incubating from scratch. I think what's more important is how do you quantify, use these metrics to be able to look at success across the board, no matter where they are, and no matter what the type of company is. And so when I talk about, when we look at emerging markets, I'm looking at businesses in Latin America, I'm looking at businesses in Southeast Asia, but I'm not saying I want to invest only in the region. My paradigm or my definition is that these are the best businesses I'm looking at worldwide, and they're comparable to companies in the United States.
All right. Are there times in your relationship with a founder when they turn out not to be who they said they were? I know you don't want to get into the specifics about FTX, where you're a minority investor, but are there lessons you picked from that is guiding your investment attitude going forward?
I'd say that the best way to think about founders, no matter where they're from, is what are they focused on, how do they improve and learn at a high velocity, and what are the ways in which, again, as a conciliary, you can be around the table. So the majority of the investments that we make, we're around the table, we're taking board seats, and again, we're advisory / being conciliary. We also make minority investments here and there once in a while where we might not be around the governance table. So it's hard for me to speak to those and the circumstance to it. But I think, look, at the end of the day, you want to back folks that have built something that's substantial, that has a foundation. You can quantify it. That's where we come from. And that they have a place to go from there, which is you can forecast that ideally you have a good product in a good market with a high resilient team. And that team doesn't have to be the best of the best. They just have to be the best for what they're building.
Is there a team, there's one founder that's especially your favorite or that best exemplifies that strategy and that thinking out of your entire suite of everybody you put money in?
No, you know, I think I'm more preferential towards emerging markets founders.
Right.
Because they're coming from nothing. And so in some sense, you can say that they don't have anything to lose.
Right.
Where they're starting from scratch. And so in the US, you have this full ecosystem where you have the Y Combinators or the Techstars or
so
these
it's very
accelerators.
advanced, yeah.
Advanced is not the right word. I think it's that when you have a tribal community of folks learning at the same velocity,
right.
You'll see more successes. In the emerging markets, you have a smaller set of folks that have that expertise. So if you take a look at China, for example, and how they emerged, you had a very small set of companies that created the ecosystem, and people learned from those companies how to be better. That also happened in the United States, but the difference is that the fragmentation of the folks across all these ecosystems learn. And so when you ask, like, who are my favorites, it's folks in Mexico or in Brazil or folks in Nigeria and Kenya where they're building something from scratch. So in Nigeria, you have people that are building internet services, banking, settlement systems. They're using all of the systems that have been built worldwide just for their own use case. In India, it's the same thing, which is purely enabling commerce. So if you look at some of the biggest companies that have been built over the last 10 to 15 years, it's just commerce, financial services, and then again, enabling financial services, access to capital, and then enabling commerce.
It's tougher to succeed in those kinds of environments. And so those that really succeed have had to overcome a lot to get there.
That's our perspective. And then what happens from there is that they're also educating the next set that have also gone through the same struggle. And then it should be able to make everything inherently deflationary and cheaper, better, faster.
There's a huge amount of excitement around AI this year. GITEX and Expand North Star says this is the year to imagine AI in everything. Are you imagining AI in everything in the companies you're evaluating, the founders who you're talking to?
Yeah, so we use our own internal system. We've been using AI for a long time. I think the difference is you have to understand what it means to take a look and use machine learning and AI for a normalized set of data, and then how to use AI and machine learning for an unnormalized set of data. And a lot of people don't know what that means. So when I say normalized data set, it means it's already cleansed, people are storing it in a certain way, and you have your own training sets, just like Google and Facebook have had for a long time. you can think of the world where a lot of advertising companies use normalized data sets and say, okay, how can I make this better? Unnormalized data sets is your email, all of the invoices and everything that is just like stored to the side that doesn't really get saved in a way that's clean. And so a lot of these LLMs, again, learning language models, are a way in which you can go into a deeper data set, look at something that's dirty, come back with something the same way you and I communicate. So the way I communicate, this is being recorded, it's being put on a screen. You can use LLMs, take that unnormalized data set and normalize it. You put all these things together. And so where does value accrue? The LLMs and the infrastructure that helps enable that. And then the second, third order effects are going to be what are all the commerce applications, what are the vertically integrated apps, similar to how you see software. And then everything in the middle, in my opinion, is just commodity, and the margins become lower.
But the potential for disruption here in almost every aspect is immense, even in terms of evaluating, okay, how much work do you need to do before you think you can move forward and offer a term sheet to a founder? Has that all changed, or is it changing based on all these tools that are now available to you?
It's continuing to change. I'll give you a story. So we have a company called ShipRocket in India, and a lot of what they have is a large portion of people that do customer service. And then that's one side of the equation, which is, hey, I can reduce my staff, but I can also increase the frequency of their productivity by, let's call it 25 to 50%. That's pretty large. On the other side of the equation is, hey, I'm one engineer, and now I can do 10 times the work that I was able to do before because I'm able to automate these pieces. So when you take all of these efficiencies into account, I think one way you can look at the world is you can save cost. The other way you can look at the world is how much more can I do? And so even the companies that we've started where we have 180 people in Mexico City itself, we've been able to build 7 new line items of businesses with those people, and I would say that would account for having 3,000 people. That's a lot. And again, what are you able to do? Now you're able to distribute a large set of service to a larger set of customers at a faster pace, at a higher quality. What is everyone else going to be able to do when you're enabling small and medium businesses to do the same thing?
You've mentioned India a couple of times. You have an India dedicated fund.
We don't today, but we have partners on the ground that are in the process of setting that up, yeah.
What are your thoughts on the market? How is it going? Your projections, your outlook, specifically on India?
Well, I mean, the stats are pretty clear, right? So you have 1 billion plus folks in India. I think if you take a step back in any of these emerging markets, you have to look at a couple of things. So when I look at Indonesia, I'm going to take a look at India, obviously the US as a whole, is that you have a uniformity of law, you have uniformity of language, and you have uniformity of distribution. And I think a lot of people forget about distribution as a whole. So one of the reasons why people talk about Saudi Arabia is that it's a large set of folks, large set of uniformity of law and distribution. And in India specifically is that you have a larger educated mass of folks. You have liquidity in the ecosystem. And more importantly, the economy is not growing in just one sector, it's growing across multiple. So if you're growing between 6 to 8% year over year, that's an extreme level of growth for an economy that you typically don't see in most markets.
Let's talk about your background. In the time we have left, you've founded 2 tech startups, went on to work at Yahoo and Social Capital before co-founding Tribe. So what are the lessons you picked up along the way from being on one side to the other?
Well, I think Tribe Capital as a firm is a culmination of all those learnings, which is how do you build data and infrastructure to be able to make better imperfect decisions. And so what I mean by that is if you take a look at most of my career, it was spent in building consumer products, consumer games, consumer messaging, things that we use every day today, and then advertising products on top of those consumer products. And the substrate that made all of these products successful was how could you measure the efficacy of what your customers were doing. And I wouldn't say there's a big lesson learned here outside of just learning how to sort of think very slowly, have multiple frameworks in mind in order to make those decisions so that when you build products that it could touch not just a couple thousand people, but a couple million people. So we always used to have this saying when we were building a product, by year 2050, no matter what we were building, what do we think the impact would be, and could we impact the lives of 1 billion people through the software and products that we're building? And one of the things that we think about at Tribe today is that the software that we're building, that we're able to help quantify, or any of the AI learning language models that we're using in order to interpret data sets of thousands of companies, hopefully 10,000 companies in the future, can we impact the lives of 1 billion people in the future?
Right. And can you usually tell when you talk to a founder who, if they have that long-term vision and they're thinking through this long-term 1 and 2, are they willing to pivot if this first idea does not work, but they still think there's a pathway here to an alternative product?
Yeah, so the proverbial story for everyone is that Mark Zuckerberg had this vision of what Facebook was going to be 10 years later, and that's not true, right? So being there, working with these founders day in and day out, they start with the vision of like, how do I just get to that next phase? And then but if you really ask them, hey, if these pieces could go right, what else could you do? They have a lot of, 15, 20, 100 different ideas around how to make that happen. And so I think, history is definitely rewritten by the winners. You always kind of rewrite, oh, I was thinking about this in the past. But if I take a look at any of my founders today that have gone from a couple $100 million in enterprise value now to 10 to 20 to 30 billion in enterprise value, they started off with a single nugget that worked really well, and they just continue to build, continue to compound again and again and again. And the way I think about it is my job is that I've seen multiple cycles. I've built companies that have been that big.
Right.
How do I find ways in which I can keep pushing the founders, no matter where they're located, to continue to think bigger in order to be able to be more successful, to have impact, not just with their employees, but a larger set of customers. And that could be one product,
Right.
multiple products that inhabit multiple businesses, and it just depends on what location you are. So again, the reason why I like emerging markets is that you're able to build multiple products and multiple businesses.
I think you've said this a few times, you like emerging markets. So if there's anybody here who's got ideas, I think they're like, okay, I should be talking to this guy, because you're still writing checks.
We're still writing checks, that's right. We're more concentrated, but I'll give you a number. We have almost $1.5 billion deployed over the last 5 years into about 25 companies.
Right.
And out of those 25 companies, about 10 of them are emerging markets.
Okay, that is a good place to end. Arjun, thank you so much. Please give him a big round of applause. It's been fantastic.
Thanks, man.